Hey everybody, Trendy John here at Simpler Trading. Today is January the 5th, 2025. Once again, Happy New Year. I hope all is going well. What a fantastic time in the market last week. Not bad as we saw bulls come in and defend a couple of levels that we'll go over earlier. But the question is, will this sustain? Can we get up and over some resistance? And if we do, then we could see ourselves at least testing towards the all-time highs in the SPY and the QQQ. I do think it's going to be a little bit harder. We do have a short week, so please take note of that on Thursday. We will be on holiday. And again, that kind of came in last about a week and a half, 2 weeks ago, but we will be off on the 9th. Okay, let's go ahead and get started today with the U.S. economic calendar. Remember, we are supply and demand traders. Our job is to identify turning points in the market where we are aligning ourselves with bigger money. And as I've always told you, I would much rather align myself with the bigger money than following the masses or the retail traders. It takes a little bit of time and practice, but with just a little bit of time on your side, you can learn how to find these levels. A lot of these videos are already on my YouTube page, so please make sure you take a look at those. And if you have any questions, reach out to me. Right before we start here, if you wouldn't mind just hitting that like button. And if this is helping you in your journey in trading, please say something on the bottom there in the comment section on the YouTube page. All right. Thank you so much. So, again, these are levels or catalysts that create volatility in the market. We don't sit on our hands and wait for the information to come out. What I want to do is make you aware of it so that we understand at that moment in time that you could see volatility jump up. What's really neat about supply and demand, or what's awesome, I think, is that we're already finding the levels where those turning points are. And these are just catalysts that push price there quicker. Okay. And I want to show you this example really quick. So we're going to go to a whiteboard. So this is a supply zone. So on my charts, you'll see red zones and then you'll see green demand. If this is your first time seeing this, basically the idea is imbalances are created in the market. We have big buy blocks in these areas, and price shoots up very quickly. And when it does this, it does not allow for all orders to be filled. So at some point, we run out of buyers, and that is typically around a supply zone, which is annotated by a red box. Once we run out of buyers, prices like to pull back to where the imbalance was created in the market. Now, if you like to use volume profile, a lot of times you'll find that you're going to find your volume ledges in these areas. It just makes sense. The bigger the candle, the bigger the volume, the bigger the impact that it was in the market. Okay. Now, when prices come back to here, then we create a process around how to get long in these demand zones, but we also create the process on how to get short in supply zones. Okay. So that is the gist of it. We're just trying to align ourselves with the bigger money. Okay. All right. So moving on, again, these are catalysts that could push price to these levels I'm going to go over with you on some of the charts that I will show you here in a few minutes. So starting off on Monday, we have factory orders, pretty benign. I wouldn't expect a whole lot of volatility on Monday unless what I have to show you at the end on the VIX holds true, then we could see volatility come in. Okay. Tuesday, we have Richmond Fed President Tom Barkin. And yes, he definitely could say something that creates a little bit more volatility than what we're expecting. Okay. Then we have the U.S. trade deficit, ISM services, and job openings. And then Wednesday, this is where it gets a little bit more interesting. ADP employment, minute of Fed's December FOMC meeting. It's always the same thing. People say, well, if they're just minutes and we already know about it, would it really be that big of a deal? It does create some short term volatility, and you should be aware of the time. And the times over here, just so everybody knows, these are Eastern time. Okay. Moving on down, Thursday, once again, this is a holiday. I don't know how they are approaching this, if they are still if futures are still going in the morning or anything like that. But this is a holiday. I will not be around the market. Matter of fact, I will be flying into Vegas on this day. So please take note of that. I will not be inside the room. But we do have initial jobless claims and wholesale inventories here. Again, I'm not sure if they're reporting them on that same day, and I'm not sure where to look. But if you want to, you could research that. On Friday, we have consumer sentiment, also some volatility I would expect from there. U.S. employment report, U.S. employment or unemployment rate, and U.S. hourly wages. Let's go ahead and move on to the next section of your broad market analysis, and that brings us into earnings. So over here on X, I like to use earnings whispers, and I've always relied on them for a really nice and easy calendar where you can take a look here. Okay. Now, again, it's still pretty slow. I said that for me, and I think for a lot of traders, it's still holiday mode until at least next week. So I think once banks start reporting, which comes in around the 14th, 15th time frame, and then you have the inauguration, which is on the 20th, this is when things start to get a lot more interesting to me. And I do believe that we're a little bit range bound between two opposing zones, which I'll show you here a little bit later. Far as earnings go, when I look at this, I'm not really interested in any of these names. A couple like KB Homes, Delta Airlines, uh, Constellation Brands. Those are some names from the past, but I don't necessarily trade these names, so I'm not that interested. Again, I think the note to take away from here is that we are preparing for financials coming up that next week. Okay. Next thing that I want to do is I always want to concentrate on the bigger picture. This really helped in 2024 and helps every year. I like to go over the quarterly candles. So the first thing I'm going to show you is the quarterly candle. I'm going to talk about a few things as far as like bigger levels. I keep my notes from every single week. They're right on here. And I believe that I read the market very, very well. And I think you all know that. As far as notes go, let's keep them simple this week for the 5th, going into again the end of the week, which is going to be the 10th. Is support is 563 by 533. And again, guys, this is on a quarterly. So I understand that prices are, that's really far below. But again, this is from a quarterly perspective. The targets are 614 as of right now. We have a top in. We came very close to our target in 2024. Didn't quite hit that, but we did pull back a little bit. And as you could see, bulls are trying to paint this wick, if you will, right? So we have this topping wick and price is staying above the body of this candle and they're trying to push up towards here. Now you can't see it on the quarterly. I'm going to show you on a weekly what that looks like. It's not as easy as it looks, okay? Now from a weekly standpoint, we are a double inside. You know what that means if you're in the trendy room. And if you want to know what that means, I have some videos on YouTube talking about the structure that we identify as supply and demand. So this is a double inside week, and I'll show you that here in a second. Um, Bulls need above 593 and a half. This will put price above the weekly 9 EMA. And then 600 and 583 will be our two major levels going into this week. Okay. Let's go ahead and minimize this. Let's go into SPY. So this is from a smaller time frame. This is a weekly. So when I talked about the double inside, this is our initial candle here. Okay, right there. This candle, which was last week, closed inside the previous candle, inside the body, which is right here. Okay. And then this candle this week, or this past week, sorry, closed inside that body as well. That makes it a double inside candle. Notice here from a Fibonacci standpoint that the 618, the golden Fibonacci, from where I anchored, which was back here in November, to the high, held. And so, again, that's very important. So, going forward into this week, again, we have our two major levels. Notice that we had a demand zone here, which was found on a smaller time frame. It did hold, even though prices broke below. Remember, when we are concentrating on the time frame that I'm teaching you or showing you right now, what's important for you to understand is that if I give you a level, I'm looking for that level to hold by the end of the time frame that we're going over. So again, these levels held very, very well. And for me, that is a major level. So 583.5 is going to be a major level down here because if prices were to close under here, then we have a high percentage or a high probability that we will see down towards 572. Now you'll notice also I have this red box here. That's the supply zone that I talked about. That supply zone comes in at around the 600 level. So again, 599, 600 is your major levels to the upside, and then to the downside, we want to see bulls hold that 583.51 level. Okay, let's go over here to the Qs, and let's go right here. Boom, and you guys can see all my notes on here. And hey, if you want to email me, you could do that as well. All right, and let's go right here. This is going to look the same. Nice, first of all, I didn't say this on the SPY, but again, I like to remind everybody, every time prices come down into the trendy cloud, which is a combination of exponential moving averages or EMAs, it's been a great place to buy. And I believe the same would hold true for 2025. If for some reason we do pull back into that area, I would be looking to go long. Maybe not necessarily just off of a touch, but maybe like an initial buy, if you will. Further down here, we do have some demand that was not tested. I went over this during 2024, and those levels still hold true to this day. I would definitely create an alert in here. If prices were to ever come back here, it would create a lot of fear in the market, but this is definitely a place that I would be interested in buying again. It's hard to believe that price would pull back that far, but you never know what's in store for the future, okay? Bigger picture, targets are 526 and 533. Support is 492 and 463. Your weekly view, the price is above the 9 EMA, and I'll show you that here in a second, and back into the bullish channel. The two major levels this week are 533 and 505. Let's go ahead and take a look there. And we're going to pull up the Qs. And here on the weekly, you guys can see these are our two major levels. So same thing here. We are anchoring our Fibonacci's from the rally there into the pivot high. You can see that the golden fib was tested this past week. We talked about this level in the previous weeks. It worked very, very well. So 505, is definitely an area where I would say is your major level for this week. And then your major levels to the upside is going to be this supply zone, which is around 533. Now, understand that you're going to find resistance around 523 and 526. Okay. But these are my two major levels. And when I said we're trading between two opposing zones, that's what those were. The zones that I just showed you on the SPY and QQQ, that's where I believe price remains into the next coming weeks, and then the volatility will basically ping pong us between those levels. Now, once price builds a base above the all-time high, and when I say a base, I'm talking at least needs to be 2 to 3 weeks above those levels in order for me to feel super comfortable that we continue that move north. Okay. Now, if for some reason, again, if we close underneath the golden Fibonacci, things turn for the better for bears, and really a nice little reset in the market where we could see prices drop below the 500 level, get into 490, 480s, and possibly towards the 454 level. Okay, so again, it's not there yet. So again, just two major levels going forward into these next several weeks. Okay. Next thing that we want to go over is we're going to go over the dollar. Okay. So that's going to be the DXY, which is on Trading View. We're going to pull that back up once again. Okay. So let's come over here into DXY, and that is the dollar. Okay. And the dollar actually moved. We're going to go to a weekly, not a quarterly. The dollar moved through our old, smaller supply zone, and we pretty much expected that. And you can see that this past week it came right up into the bigger supply zone. Now, notice I made a DXY alert here. This is where, if for some reason the dollar gets up and over 109.5, I would say definitely be cautious, and you could see a move up towards 111 and a half, where I do believe we'd get a harder rejection on the supply. Okay. Caution over 109 and a half, like I said, but price is also supported by 107 by 106. Okay. Let's go ahead and move on into the 10-year right here. So again, the 10-year treasury. Things are, again, it's teetering definitely on caution here. Looking at the dollar being strong, the TNX is still holding above the 618. It's above the cloud. There is a possibility it could move up towards 4.8, where I do believe it would reject hard from there. As far as this week is concerned, if price stays above the 618, be cautious. I want to see prices in the 10-year treasury drop below 4.3. Okay, or just at least settle. All right, meaning, no volatility here, just like let it do its thing. Okay, next chart that we're going to be looking at is the skew. All right, so the skew did pull back about 10 points or so. It came in at around 157. I believe it was 167 last week. Right up here, we talked about it. It was extreme. I've gone over it, you know, every single week. We knew to be cautious. The market did pull back, but it also was not a surprise. Okay. Usually in this area, we're looking to buy puts 30 to 90 days out. Once again, it is a new year, so I'll go over this really quickly. Back in 2021 or so, the market looked a lot like this, and it threw a lot of traders off because these are extreme levels. And when you look at the history, when prices are in here on the skew, you get a big pullback in the overall SPY, QQQ, Dow, all those type of things in the overall market. Um, However, things changed, right? And we wanted to make sure, and this was the area that I'm talking about, 2021, 22. We want to make sure that we didn't fall into that same way of thinking, and we wanted to adapt. And adapting was finding that these levels very quickly in 2023, 24 were going to be the levels we wanted to be, I guess, risk on, risk off, if you will. All right. So going forward in 2025, you can see here every time that the skew reached down into this level, this was a great place to go long on the SPY, Qs, so forth for only 5 to 10 days out and make some really good money. Okay. Now, what's going on here is as the price of the skew is dropping, that means there's more fear coming into the market. And you're going to see how that's aligned with the fear and greed here in a second. Okay, in a second. It also means the majority of participants are on or buying the put side. So they're buying insurance. Okay. Now, a lot of times when you get a lot of people on the put side, and it's been sitting there for a while, the market likes to rip to the upside and make your puts look like crap. All right. And the opposite is true. When a lot of fear comes into the market, especially in 2023, 24, in this area, this is where, you buy the fear and then you sell the euphoria. Okay. So euphoria is up here and fear is down here. And again, these are the levels, and we will continue to trade these levels or take note of these levels in 2025 until they're wrong. Now, I want to bring this note up because you might have forgotten, but looking at the data here over the last year and a half or so, is that we never had a more than 1 week close below this line. And I always said, hey, if we close 1 week underneath here, you want to be cautious. So I still want to say that going forward in 2025. Okay. So, guys, listen, the dollar, the skew, and the 10-year treasury says, hey, there's a little bit of caution in the market. And that leads us to the fear and greed right here. All right, so you'll notice that we are pointing at 32. We were at 34 last week, so there's a little bit more fear in the market, again, meaning that the majority of participants are starting to buy puts. And, looking at some of these future charts I'm about to show you, you can see how the market could bounce this week, or like most weeks, or we see some more chop. Okay, so let's get started with the ES futures here. I am using the ES-H25. I understand that I can just use the straight up ES, but for right now, I just have it on the H25. Here are some notes that I want to go over as far as the weekly is concerned. So I'm neutral bullish. Why am I bullish? Because it pays to be bullish in the stock market, right? Like how often are the bears right? All right. And I don't like to like distinguish between bulls and bears, but those who are always betting on some sort of big pullback, the idea is that the bulls kind of rule the market, and every once in a while we get these big resets and so forth. And sure, you need to be ready for them because they can destroy you if you're overly bullish. All right. So I'm bullish neutral. I'm neutral because of the things I just went over with you. All right. There's reason for caution. All right. Now, what's interesting is again, the SPY and the ES futures are related, but not necessarily do their, candles look exactly the same. So we had a double inside on the SPY, but here on the ES futures, we actually technically closed at an inside and down. Inside and downs usually lead to further continuation to the downside. All right. Now, what's important to note here, though, is that we do have higher lows, but we also have lower highs. If you connect the dots, you basically have what we call a sideways trend. And you guys can see here, this is our range. All right, so you could just put a box around it. The idea is as price gets higher towards the top of the box, you look to be cautious. And this makes a lot of sense when you're looking at the supply and demand zones that I created. Well, the supply zone happens to be towards the top of the box. Down here towards the bottom, you guys can see this big green zone. This is your demand, okay? And that's also towards the bottom of the box. Right now, currently, price is just really sideways, okay? From my experience, most traders lose the most money in choppy sideways markets because, they get a little taste of something. For example, last week you got a little taste of, hey, if you bought the dip, you did really well. I did really well. I did really, really well on Tesla last week. I did well on SPX. I made some good money. Hey, I'm up on the year. Congratulations, right? But you feel that and you're like, hey, man, things are going well. I know what I'm doing. I'm in the groove. And then immediately, in a choppy environment, you start to get confused. And then because of last week, you have this euphoria and you're conditioned to buy. You buy the dip. And really, sometimes, especially for you option traders, and I trade it all futures, options, equity, all of that's in my portfolio. Just for options, you really have to be right with your timing. All right. Timing is everything, right? Timing is what really makes options fun if you're right, if your timing is right. It's really easy to be wrong on timing if you're just buying options. All right. But if you're selling options, so you're selling to take in credit, this is where you can do very well when you're predicting or analyzing and seeing that we could be in for choppy conditions. So, looking at this chart, I'm going to continue to tell you that I believe we trade between the two major zones going into the next several weeks, maybe even into the inauguration. I do believe, and what I should say, and I keep repeating this, I don't want anyone to get confused. I'm bullish on buying the dip. All right. I'm not bullish up here towards the top. I would much rather see continuation to the downside to shake out the market, maybe into the 20th, into the inauguration, and then we get like this snapback rally all the way back up here. So we get this really good range of buying the dip. Now, I understand that I can be completely wrong. And so, what I want to tell you is if prices get up above this blue line, and I've made notes here in the room, if we get above the blue line, which in this case is 60.36, that would put price above the yearly edge. Far as trendy methodology is concerned, as long as we are underneath this edge right here, it is resistance until proven otherwise. So please be aware of that level. 60.36. Okay. Sideways to down until we can get up and over that level. Okay. Now, listen, sideways to down until we get above that level. That does not mean I do not buy the dip on smaller time frames in the demand zones. Okay. So please, please understand that. This is based off a weekly. All I'm saying is on a weekly, this is what we're looking at. And then that leads us to our next chart, which is the daily. All right. So these buy triggers or these trigger longs were here last week. All right. Notice that they worked really, really well. This was imbalance that was created in the market around elections. Okay. So going back to the first part of this video, I taught you that catalysts can create these big moves in the market. And you can see here that a lot of volume poured in, bulls took charge, right? And then if you waited too long, waited for the catalyst after the fact, you could have been buying up here towards the top and then get absolutely spanked here. Now, what we do is we come in and we identify the level, which is right here, which is the imbalance in the market. We take action by creating these charts for you before price gets there, and then we teach the process of getting in long here. And it's not easy, all right, because this is where fear is. And if it were easy, all of you would be doing really, really well, all right? So demand was located by myself. I put it on the charts, take action here. You're able to make some money to the upside. And then a few notes that I want to make here on the daily as we move into this smaller time frame. Price came into demand for the second time and made a higher low. This is usually a bullish sign. Okay, there's a higher low there. All right. That means, hey, there were enough buyers here. We didn't have to dig in deeper. Now, if for some reason we take out this low, then I would be a buyer towards the back end of this box. So again, around the 57.90, 57 and a half levels down here towards the back end of the box, okay? Remember, I talked about that blue line, the yearly edge right here. Our resistance level is here going into this week. And a couple notes that I want to make is that the top of the cloud and the trendy edge, which is underneath this yellow dotted line, are confluent. That means they are resistance until proven otherwise. Also note that we have a trendy turn signal. Trendy turn signals, okay, there's compression here. You guys can see what we're looking for is continuation to the upside. Now, in a perfect world, you don't wake up and see a huge gap up. You actually see a pullback and then you buy that dip based off of the fact that we came into demand and that we have a turn signal and then you look to go long. Okay, again, on smaller time frames. These are the notes that I wanted to identify on the daily. And then up here on your short trigger, you guys can see that it's identifying the inside and down formation there. Okay. Our next time frame is going to be the 4 hour. We've kept the same chart for the last 3 weeks. I just want to show you how well the zones work. Price came to the supply zone. Again, we identified these before price got there. You look to get short and or pull, take some of your longs off. Prices pull back, they come into demand. You get a nice pop, but it hits the cloud. Cloud is resistance, still proven otherwise. It digs deeper in that zone. We get a trendy turn signal. Prices then pop up. People start to feel more comfortable. They start to potentially get in on the long side. But again, we are at very crucial levels here where we could see either a pullback, just a short pullback into Monday, Tuesday, and then possibly start to see some kind of trend develop into Tuesday afternoon, Wednesday, okay, right before the holiday. Notice here that this is for the trendy room. This is an AC/DC that's setting up. AC/DC equals ME, all right, which is the trendy edge. Basically, what I'm saying is on this particular setup that we can see that upper purple line here just based off of these levels. So let's talk about that. As long as we can see 61.45 as long as 59.85 holds. That is $6 more in the SPY. Okay, let's go ahead and move on. We're going to go now into the NASDAQ. All right, so over here, again, technically, just like the ES futures, we closed inside and down. We came into the 38.2, which is the bull channel that I teach you. I anchored my coefficients from that low to this high, and you can see these levels are working really, really well. Technically, again, it is an inside and down. On the bull note here, we held the demand zone. We are now above and still above, sorry, we're still above the cloud here. So all of these are bullish reasons to stay bullish in the Nasdaq. Again, neutral because of the other things I've talked about. Just like the ES futures, notice this blue line here, which is really important. This is your trendy edge. It will look a lot better if we can get above there. This is resistance until proven otherwise. All right, let's go ahead and move on. This is going to be the daily. You guys can see here as well that the buy trigger worked well. I put some more buy triggers in here, and I also want to note that this imbalance has not been tested. Okay, it came very close, but this is looming for me. Usually it's not about if, it's about when. Timing is the variable. I'm not saying it's going to happen this week, but please take note of this level. It's very, very important. If we do get there, I would be looking at buying. Far as other notes here on the daily, we created an inside and down here and an inside and down here. Both of these are supply zones. I have my first resistance level at the first supply zone and then my short trigger here at this supply zone. Again, I don't go short or go long just because I have a line there. We go to smaller time frames and we look for the things that I teach you in the room to get long or short. Notice that we are inside the cloud. Typically, when we're inside the cloud, it is resistance until proven otherwise. Also notice between the supply zones, we still have some trendy edges. These levels will also serve as resistance points or take profit points from a long entry. Okay. Let's move on to the 4 hour. Just like the ES futures, we've been using this for 3 weeks. We came up, we didn't quite touch the supply zone. So that's a bullish thing. You know, if this thing does end up taking off, I do believe we can move all the way up to this purple line, ACDC equals ME. Let's go ahead and go over those levels going into the NASDAQ, okay? Real quick, NASDAQ again, although price had a very nice bounce, technically it did close on an inside and down, but in a bull channel, all the things I went over. Just like the ES futures, bulls need above the blue line. I just want to make sure everybody understands that because you're going to see this blue line on all the charts. 4 hour, same chart for the last 3 weeks. Take note of how the zones have worked. The 4 hour chart is setting up for a possible ACDC. This means we could see 22,285 as long as 21,560 holds. That is 16 more dollars in the QQQ. There are a lot of edges between that target and all our resistance until proven otherwise. I just went over that. Now you have the levels, you understand what we're looking for. Bigger picture, as long as the green holds, we're looking for the red. Okay. I'm giving you a roadmap so that you understand what we can do in here. Lotto traders, people who like to just, hey, what I trade, what I'm willing to lose kind of idea methodology. Listen, if we go bid above here and you like the idea, the queue's going up anywhere from $10 to $16, just buy out of the money if you like the idea. All right. But be willing to lose the money that you put into it. That is a more of a I would say more of a set and forget type trade, but also the type of trade based off of just the methodology of ACDC equals ME. And that's how I like to approach it is I put in an amount of money just for that specific setup and say, okay, I'm just going to trade this. You don't have to go out of the money. You can do at the monies, you know, a few strikes out of the money. But the idea here is we will move from here to here. Timing is the variable. I believe coming into this week, Monday and Tuesday sound kind of boring unless, the Fed says something that creates some volatility. So it could just be kind of choppy for the first 2 days. And then as people get ready for the holiday once again, it's just making it really weird. The last several weeks have, we've had holidays. We have not had like a solid week. And like I said, towards the 15th, I think is where things get a lot more interesting. The next thing that I want to go over with you guys is going to be Bitcoin. I hold Bitcoin and have been reporting on it here. It's been doing really, really well. I like the bigger picture and try not to put you guys in the weeds too much with all the, little levels. The big thing that I want to say here is after hitting the target in 24, price came in. We expected that. This currently is an inside and up formation on a monthly. And as long as it stays inside and up, it's very bullish. But just like the ES and the NASDAQ, we have a theme here. Okay. We got to get above the blue lines here. And that blue line is at around 101,025. If we get above there, things start to look better. We should see a breakout into 104 and possibly back towards, 107, 104 to 107. Big picture, big picture, this 9 EMA should serve as support, and so should this green level. So far as like I'm concerned, as far as my Bitcoin is concerned this year, I put money into the account the first of every month, and then I just deploy the money into those long-term holdings. And I'll do the same here, where I'd really like to probably double up and triple up my positions and stuff like that is if price pulls back into this green zone here. Okay. So for right now, it's just easy ads as long as price is staying above the 76, 74,000 level. Short-term support is going to be 90,000 by 87. All right. Last thing that I want to show you is, and I don't usually go over this, but the VIX, just something that I noted here as I was looking around at some of the charts. I came over to a daily and I noticed the 200 SMA. You're going to notice the circles that I put on here. It's just something to take note of. Price came back into, or the VIX came into the 200 SMA. Almost every time that we've had a volatile move, that's created like a big extension off of here, every time it's come back, we've gotten a really big bounce of volatility back to the upside. Usually volatility means that there is, the market's going down. All right. So this was a pretty big move. All right. And you can see that it broke here, but it's coming back for the second time. We could be setting up for some volatility into this week. Now, bigger picture, all right, is that this gray box, and this has worked really, really well for me this, for years, really, is every time we come back here, just be prepared. It's a matter of timing. You could feel it. You listen to my broad market analysis. I tell you when to be fearful, uh, or where to have risk on, where to have risk off. All these things are important. We look for confluence. Right now, it actually looks like if we don't get the move off the SMA, the simple moving average there, that the VIX could head back towards 14 again. Okay. So overall, my sentiment is bullish again because it pays to be bullish, but cautious because of the TNX, the dollar, the skew. What that is translated to over and over and over is that we get a small dip in the market, but it's a buyable dip. At some point, it won't be. I went over those levels with you. I hope they really helped you. I really appreciate you guys. If any of you are interested in joining our community, please visit simplertrading.com. Look for the trendy room. I also have an SPX only room where we only trade SPX. Okay. So you guys have a wonderful day. Have a wonderful weekend, and we'll see you tomorrow morning.